In this video, I will test a very profitable trading strategy with only one indicator shared by HyperTrade to find out how profitable it really is. For the backtesting, I will set the initial account size at $100 and I'll be risking 2% of my account per trade in order to make 3. I will also try to improve this strategy in the second part of this video, so stay tuned for that. The test will be done on the price of Ethereum USDT on a 15-minute time frame. Okay, now let's go ahead and search for the indicator the strategy is based on. For that, let's click on the Indicators tab and type in Market Structure Break and Order. It's going to be this indicator by Emre KB. This indicator basically shows the market structure break and order blocks. A bearish breakout occurs when the price action is breaking the most recent lower low. This is when the indicator will print an MSB red label, which stands for market structure break. On the other hand, when the price action is breaking the most recent higher high, we have a bullish market structure break. The indicator also consists of the zigzag, which helps us identify the highs and lows in the market. And finally, we have these order blocks. These areas can be used as support and resistance. In this strategy though, we're going to be using these areas to enter long and short trades. So the rules for entering a long trade are as follows. First, the price action must cross and close into the bullish order block. This means that the closing price of at least one candlestick must be inside the green box. And the second condition is to have the candlestick crossed and closed above the bullish order block. A buy order will be placed at the close of the trigger candlestick. The stop loss is going to be set at the recent swing low. And we're going to be targeting 1.5 times the risk. Here's one more example for a long trade. We see the bearish candlestick just crossed and closed into the bullish order block. Now we're waiting for the bullish candlestick to cross and close above it. The rules for entering a sell position are exactly opposite. First, at least one candlestick must be closed inside a bearish order block. Second, we enter a short position as soon as the price action crosses and closes below this red box. The stop loss will be set at the recent swing high. The take profit target at 1.5 times the risk. Okay, let's take a look at one more sell example. Here we see the price action is approaching the bearish order block. As we already know, in order to enter a sell position, we need to have the candlestick crossed and closed inside the bearish order block first. There we go, we just had a breakout and a signal to go short. I took a quick look at some of the signals issued by the strategy and I found a major problem. So here we see the price action just got into the bullish order block, and on the very next candlestick we had a signal to take a long position. And the reason this trade didn't turn out to be successful is because we took a long position when the price action was making lower lows and lower highs. The fact that we're not taking into account the zigzag pattern when making a trading decision is actually a big disadvantage. If you watched my previous videos, you already know that some of the best strategies I have on the channel are actually the ones that follow the trend. And this coincidence is not random. You see, when the trend direction has been confirmed, it's easier for you to win the trade because the market participants are more likely to continue to push the price in the prevailing direction of the trend. That's why we always need to analyze the market structure first before making a trading decision. But anyway, let's actually do the backtesting to find out how profitable this strategy is. Okay, the backtesting is finished and here are the results. The win ratio for the strategy is only 54%. This is definitely really low for such a risk-reward ratio, but despite the low win rate, the strategy is still making quite a bit of money. The profit factor is 1.76, and we had 6 consecutive wins against 4 consecutive losses, and the maximum drawdown was 13.32%. So overall, I give the strategy a score of 6 out of 10. I wouldn't say the strategy is bad, but it could be much better if we made some minor adjustments. So in order to improve the strategy, I will add one more entry rule that will hopefully change everything. So the rules for entering a long trade are as follows. First, the price action must get into the bullish order block zone. Second, we need to have a breakout where the candlestick crosses and closes above the zone. And third, the price action must make at least 2 higher highs and 2 higher lows before the breakout. This is an ultimate confirmation that the market is in an uptrend. The stop loss will be set slightly below the recent swing low. The take profit target will stay the same, which is 1 to 1.5 times the risk. This way, the probability of a successful entry will dramatically increase. Here's another example for a valid long entry. We see the price action just got into the bullish order block, and then it crossed and closed above it. And the market formed 2 higher lows and 2 higher highs before the breakout. If the price action breaks below the most recent higher low at the time it makes the pullback, the setup automatically becomes invalid. Another good way to protect yourself from taking losing trades is to make sure that you have enough room for the take profit target to be hit before the price action bounces off the bearish order block. Alright, now let's learn the sell positions. So first, the price action must get into the bearish order block area. Second, we need to have a breakout where the price action crosses and closes below it. And third, there must be at least 2 lower lows and 2 lower highs before the market makes the breakout. The stop loss is set slightly above the recent swing high, and the take profit target stays the same. Also, make sure you do not take a trade if the price action breaks above the most recent lower high before a signal to take a sell position. This usually indicates that the bearish trend is not strong enough for you to enter the trade. Okay, now let's move on to the second backtesting to see if the results are any better. Alright, right away we can see that the win rate has increased to 76%. The profit and loss is also looking really good. The profit factor is 4.75 and we had 16 consecutive wins against only 2 consecutive losses. So yeah, I'm really happy with these results. The strategy is definitely worth our time. If you have any ideas on how to improve the strategy even more, please let us know in the comments. By the way, if you want to see my best strategies on the channel for trading crypto, stocks and forex, check out this video right here.